In this video, we're going to talk about what a liability is in more detail. So a liability is an obligation or debt that a person, business, or entity owes to another party, usually arising from past transaction or events. So in the bare basic definition, a liability is a future obligation which arises from a past transaction. So for instance, let's just say hypothetically, me and you were business partners and we make water bottles and we sell it for a profit. So in this case, we're a manufacturer. So let's just say hypothetically, the bottle caps, we buy it from another supplier. And let's just say that we bought the raw material, which is the bottle caps, and we haven't paid them yet. So now a liability arises because of a past transaction. We now owe the supplier money in the future. A liability represents the claims that creditors have on the entity's assets and are settled by delivering economic benefits such as paying back money or providing goods or services. So now our supplier, in my example, essentially has a claim on our assets because eventually our cash is going to go out to them in payment of what we owe them. Now, the second part, providing goods or services, let's just say hypothetically that a customer came to us today. He's like, hey guys, I'm going to give you guys $1,000 today. I need the water bottles delivered in a month from now. So our main revenue source is that of the water bottles, selling them. However, since we haven't sold the water bottles today, we haven't earned that revenue yet. So we're going to set up an account called unearned revenue. So now an unearned revenue is a liability because of a past transaction. We now have a future obligation to deliver those water bottles at a future date. So in this case, that falls under the definition of providing goods or services. And now we have 5 key examples of liabilities. The first one is that of accounts payable. The perfect example of accounts payable is us owing money to our supplier for the bottle caps. Another one is salaries payable. So our employees work for us, but we haven't paid them yet, so we owe them money in the future. Income tax payable is we owe the CRA money in the future. Bonds payable is, we'll talk about this more at a later date, but bonds payable is we issue bonds to the public and we owe the money back to the public. And then we have mortgage payable. So a mortgage is essentially a liability that's set up for the purpose of buying a house. We now owe the bank money for the amount that they've given us.